Chinese electric vehicle maker BYD was in the news recently when it dethroned Tesla after selling 77,000 more cars as of July 2022. BYD is backed by Warren Buffett, whose company owns 20%. It dominates China's EV market with 29% market share, ahead of Tesla's 7%. The company tripled its profit during the first half of 2022 compared to the same period in 2021. In July, its battery business overtook LG Energy Solution in sales and is ranked second in the world. However, Berkshire Hathaway sold BYD stock twice last week, dumping over 3 million shares, causing the BYD stock price to plummet 20%. Industry experts expect Berkshire to divest completely from BYD. Why does Warren Buffett want to divest from the red-hot EV company in China? Hi everyone, welcome to Lei's Real Talk. I'm Lei. China's auto industry overall isn't doing well, but BYD is red hot, according to the China Association of Automobile Manufacturers. In the first half of 2022, domestic auto sales fell 6.6%, but sales of electric vehicles grew 1.2 times. And BYD contributed greatly to this growth. It reportedly sold more cars in the first 7 months of 2022 than in all of 2020 and 2021 combined. Warren Buffett famously said, "I'm greedy when others are fearful, and fearful when others are greedy." So what makes Warren Buffett fearful of China's EV market and want to divest? First, profitability has remained a big problem. Of the three major EV makers, NIO lost $10 billion in 6 years, Xpeng lost over $3 billion, and Li Auto lost $100 million in the second quarter of this year. It lost $3,400 for every car it sold, which means that the more cars it sells, the bigger the losses. Some say that BYD and Tesla are the only profitable EV makers in China, but BYD is profitable with the help of the Chinese government. According to data from China's Industry and Information Technology, BYD received an $800 million subsidy from the central government in 2021. BYD showed a profit of $480 million. Without the subsidy, it would have incurred a loss of $320 million. But 2022 will be the last year for the government subsidy program. In fact, it's more difficult for EV makers in China to be profitable now because the price of lithium, a key element in the production of EV batteries, has risen 750% since the beginning of 2021. Battery makers such as Ningde Times increased battery prices in the second quarter of this year, transferring the incremental cost to EV makers and leaving them more in the red. At the 2022 World Power Battery Conference, Zheng Qinghong, chairman of the Guangzhou Automobile Group, complained that money-losing automakers are working hard to help the EV battery industry stay financially afloat. To control costs, BYD Auto secured a lithium mining contract from the Chilean government earlier this year. However, local people protested because they fear that the mining activities would pollute water supplies. So in June, the Chilean Supreme Court gave a red light to the contract. The Wall Street Journal commented that the global demand for nickel, cobalt, and lithium is running into a new global wave of resource nationalism. This could hinder the global green revolution. A report by the Boston Consulting Group points to a lithium supply crisis by 2026 at the earliest and 2030 at the latest. The report cited two factors. First, the amount of lithium extracted from deposits around the world will fall short of meeting demand. Secondly, the capacity of refining lithium can be disrupted due to geopolitical events, natural disasters, and environmental concerns such as soil and groundwater contamination. The second fear or concern that savvy investors like Warren Buffett have is the fact that China's ongoing energy crisis is threatening its green agenda and the EV industry. During the recent energy shortage in Sichuan, a screenshot sent to MIT Tech Review by a Chinese Tesla owner shows that on August 24th, only 2 of the 31 Tesla supercharger stations in or near Sichuan's capital city of Chengdu were working, and EV owners in the area were forced to charge only during off-peak hours. This video shows the long line of cars waiting outside a charging station, and we can't even see the end of the line. A Chengdu taxi driver said in this interview that he waited in line at 8:30 p.m. and was finally able to charge at 5 a.m. in the morning.
只在这儿一直等嘛，也基本上也一直在这儿排队，晓得嘛？你们演出来生意都没拍啥子，又要排队，电又舍得快。
Teld New Energy, which operates 300,000 charging towers across China, is asking drivers to check a charging station's status before leaving home, as some charging facilities are shut down due to the energy shortage in China. U.S Auto is calling on Sichuan area customers to share home chargers between August 20th and September 20th. The total number of green vehicles, or EVs, in China surpassed 10 million in July, the largest in the world and 4 times the figure in the United States. But wait, there's one big problem. The electricity that powers these so-called green cars come from good old coal. Two recent reports on China's coal power and coal mining sectors show that Beijing has unofficially and quietly abandoned the promised carbon reduction targets. China's experts are now talking actively about coal as the solution. A report titled Coal Power Construction Imperative Under Normal Power Shortage, published by Xingda Securities on August 25th, suggests the need to accelerate the once slowing development of coal power. Capital Securities issued another report on the coal mining industry on August 26th, stating that global energy shortages will further drive up the prices of natural gas, oil, and coal. However, compared to natural gas and oil, coal is the most cost-effective and therefore the best choice for China due to its low cost and large reserves. In fact, China ranks 4th in world coal reserves after the U.S., Russia, and Australia. Comparing the average cost per unit of heat, if coal is 1 yuan, the price of natural gas and oil are 2.11 and 1.41 yuan respectively. In late October last year, Beijing eased the restriction on coal power. Last December, the regime reclassified coal and petrochemicals as feedstock energy consumption and did not count them as part of the total energy consumption. At the Coal Power Retrofit Technology Promotion Conference this past April, Lü Qinggang, director of the Institute of Engineering Thermal Physics of the Chinese Academy of Sciences, introduced his new technology, which involves converting solid fuel such as coal to gaseous fuel. This conversion approach may help the regime recategorize coal as low-emission clean energy. This change resulted in a rebound of coal power investments in China after a steady decline from 2016 to 2020. The Xingda report said that China's coal power investments increased 21.5% in 2021 from 2020, and in the first half of this year, coal power investments reached $5 billion, which is an increase of 71.8% compared to the same period last year. According to Greenpeace data, in the fourth quarter of 2021, China added 11 gigawatts from new coal energy facilities, accounting for 59% of the year's total for new installations. In the first quarter of 2022, another 8.6 gigawatts were added, up 103% from last year. No matter how Beijing changes the definitions, when the electricity that powers EV cars comes mostly from coal, the claim that EV cars are green is false, and I think Mr. Warren Buffett knows this. In 2008, he sold PetroChina and bought EV maker BYD, and in the last 2 years, he started to buy oil again, and now sells BYD. His investment and divestment should tell us something about the direction of the green initiative. Personally, I'm not against electric cars, but I don't think you can claim they are environmentally correct as we're led to believe. That's all for today. Thank you for watching. See you next time.